Hi everybody, this is Phil at the Laptop Trader, and welcome back here for January 8th, 2023. Happy New Year to everybody. Anything discussed, said, or talked about on this video is for education, information about stocks in general, trading, and is for informational purposes only and or entertainment purposes only. So take it for what it's worth. Hopefully, you guys have enjoy what I'm going to present today, and just trying to give back to the trading community here, one video at a time. So this will be our monthly video for January. Who is this channel for? This channel is for anybody that wants to learn more about the stock market, um, how and why I approach it the way I do, and anybody that maybe is even confused or has never invested or traded before. So this is a pretty basic channel, but I think it's a lot of stuff I've learned over the past several years. I've been an investor since around 2000 and a more active trader since about 2019. And we're certainly going into some very interesting times here in 2023. One of the things we are going to talk about today is going to be concerning technical analysis and our bias time frame and our action time frame. And for that, we're going to start with a view here of the S&P 500 chart. On this chart, this is just the S&P 500 index over on bar chart service the maximum time frame allowed. So this is going back to about 1980. So you're talking about, 40 years of pricing. And so when we look at this initial chart of the S&P 500 index, we get a long-term bias time frame of overall the market goes up. And so I think this is what most people are sold when they first enter the stock financial markets is the market always goes up. Well, if you look out long enough, that's true. If you look back at a chart over an even longer time frame back to the early 1900s, it wouldn't even look like it basically looked like a straight line going from left to right going up. And so that's why I think that's sold that way, in case you've never invested before. They say, well, the market always goes up. Well, that's true over the longer time frame. But when we look at our investing time frame or our time frame to try to make some money, that can differ. That can differ greatly depending on how old you are, what your investing experience is. And so I want to talk a little bit about that today. And so there's kind of another view of the market, which is a shorter term view, more of a trading view. And if we take this chart, and just on this chart on the right side, you would see this would be 2022, from here to here would be 2021. That's just the last couple of years. We've certainly experienced a lot of volatility over the past couple of years. But if you wanted to trade on this chart, let's say you wanted to buy the index or trade the index, well, you're going to have to come down out of this longer term time frame, maybe to a 1 year time frame, okay, to make a better investing decision. Because as you come down in time frame, the your bias is still the same long term, but short term it changes because now you can see it's more of a down market over the last year. So if you were trying to go long or you're trying to buy stocks during 2022 and you're trying to go long, well, you may have made money and you may not have made money depending on where you entered or where you exited during the last year. So we'll dig a little bit deeper into that subject here today. And then finally, at the end of the video, I'm going to give you my top 10 individual stocks that I'm either already in as far as the position goes, or looking to get into for 2023. So that'll be towards the end of my top 10. But quick review. You can watch our initial video on this, by the way. Quick review. Anyway, this is the Laptop Trader. Welcome aboard. This is how I look at the market. I kind of think about, in my mind, in the shape of a bell, because Wall Street rings the bell every day. There's 4 stages of any market, any product, or any service. You could think of any product. I kind of think of music sometimes when I think of this cycle, okay? Where if you were to look from the left to the right, you could see 1, 2 is an upcycle, 3 is kind of a distribution stage or end of the cycle or end of the move up, and then 4 is where a product or service or stock falls out of favor and goes in a downtrend. So that's what we just experienced in 2022, was at stage 4. Now you can put anything on this cycle, such as music. It's a great example. Okay, so long time ago, phonographs were in style. They came in style, then they went out of style. And then something like records or LPs came into style, were popular, then plateaued, and then went out of style. Then the next product came into style, such as 8-tracks and cassette tapes, and then those went out of style. So as technology changes and consumer tastes change for whatever reason, then the next thing becomes popular, right? So currently, we're in probably the end of the iPod or MP3 music stage, and we're into more of a streaming music stage. It's streaming video stage where that's popular now, right? Think of things like Spotify, iHeartRadio, podcasts are very popular. YouTube is still very popular, obviously. So just kind of think about that when you look at these 4 market stages. Well, the same thing happens with stocks. No one pays any attention to them in stage 1. Then in stage 2, you get the everybody wants to get on board phase or the greed phase. Then stage 3, the company kind of plateaus or maybe just becomes a mature industry. And then stage 4 many times gets sold off for whatever reason. And many companies go out of business. And I think that's what we're seeing right now is kind of a washout in the market. So again, if you can get this picture in your brain and apply it to these charts we're going to talk about today, especially when I show you my top 10, it should make sense to you what we're looking at. So we're going to talk about trends, sideways trends, uptrends, and downtrends on this channel. Different names for the 4 stages, such as accumulation, stage 1, stage 2, greed, stage 3, distribution, and stage 4, the fear stage, where everybody kind of wants to run out the door and get out of these positions as soon as they can. And this is just kind of a reverse picture again for review of right now, kind of where we're at with some stocks and the market. So if you could get that picture in your brain, let's go back to this chart and just talk about kind of my bias time frame I kind of like to use recently is this 3-year bias. I'm showing you this too on bar chart because you get a lot of free stuff. I have no affiliation with bar chart. I don't get any money or kickbacks for this, but over the last 3 years, this is the S&P 500. That's what it looks like, okay? If you want a larger chart, you just click this arrow. You can get rid of some of the noise. So this is a 3-year weekly bar chart, okay? So you don't see any colors on here, but these bars are pretty simple to read. There's a little line on the left side of the bar, that's the opening price, and on the right side of the bar, there's the closing price. That's how you read that. But let's make this a little bit simpler to read. I prefer candlesticks, open, close. Okay, I think that's easier to read. Candlesticks are very easy. Got a video on that. If you don't know how to read candlesticks, but red candlesticks, the opening price is at the top, Closing prices at the bottom and in between is where the price ranged during the day. Green candlesticks, prices open at the bottom of the candle, close at the top higher, and is green. And that's the range of those candles. So you can see different days form kind of a different shape of each candle, or a different week forms a different shape of each candle. So we can see here last year, as our bias went from, stage 4, a quick stage 1, and back to stage 2 uptrend. And then in 2022, we reached stage 3, okay? And then we came down in stage 4 pretty much all of 2022. And now we're into the first week of 2023. That's the most recent candle here on the right of the chart right there. So we had, just as a quick market update, we had an up week. We had a green candle, which opened and closed higher. It left a bottoming tail. So did the previous 2 weeks at the end of the year. So that's, I think, bullish price action in the short term for the markets overall. But if we were to draw a line on this chart, okay, we're still in an overall downtrend like that. So I don't use trend lines as a decision tool, but you can see we've got higher high pricing pivots, lower highs, lower highs, lower highs with a big red candle with a topping tail there, okay? And we've got lower lows. Now right here in October, the momentum kind of slowed to the downside there between here and here. We did make a lower low, but momentum has slowed from this aggressive selling back here in these weeks and months. We actually had a little bit of an uptrend into the end of November, first week of December. Well, then we didn't get the Christmas rally. We got another sell-off in December. So the question is the downtrend over? And that remains to really be seen. I don't have a definitive answer on that. My intuition tells me that no, the selling is not over because we have other underlying economic issues that will affect stock pricing. So there's two views on that. One is that all the bad news has already been priced in. And then there's the other view that says there's more bad news to come. Which way that goes, I don't have a definitive answer for you guys on that, but I'm hoping for the best, but I'm actually expecting the worst here in the first half of 2023. So that will conclude our market review there. And that's just kind of a bias. Now, if I was going to trade, I would maybe look at a 3-month daily chart, something like that, okay? And maybe like here, my trend line here kind of stuck on a chart. I wouldn't really use that as a hard goal, but you could see where prices based on this trend could come up to about 4,000. Okay, right now we're at 30. We closed the week at 38.95 in the index. So that's about 100, 105 points, 110 points possible to the upside in the short term. And we did finish this day bullish. We finished the week bullish. So the daily and the weekly are kind of in alignment there, where we've had this sell-off into the new year. Red bar with a bottoming tail. We got a red bar here and then a green bar, which makes this red bar ignored. We can kind of see our 3-bar setup there. It's a little early to take a trade based on that. I would not trade this 3-bar setup, or 3-bar turn as I call it. And then we had a bottoming tail green candle, kind of a indecisive red candle, another green candle, and then a red candle on Thursday, and then another reversal. So we're seeing in this time frame in the most recent weeks, buyers are stepping up. Buyers are stepping up around this 3,800 area in the market. So again, we have another 1, 2, and another 3-bar turn here to close out the day and the week. So that's why I think this week prices should go up from here. How high they'll go up, I don't know. This market's subject to any news event at any time. But I could easily see this week 100 points up, maybe even 200 points up this week, and maybe a pullback end of the week or following week. So because we're still in uncertain times, uncertain economy, inflation is definitely not going away anytime soon. That is one thing that's going to stick, I think, throughout 2023. Inflation, interest rates probably still rising, which is going to affect growth. And that is the overall economic picture. So I hope that helps you guys out and gives you a picture anyway of what I am looking at in the overall market. Now you can trade this using an ETF called SPY. This would be 1/10 of the price of this index. You don't have to trade the whole index. You can trade this ETF if you guys want to trade this ETF. One way to trade that would be to put an order in on Monday or Tuesday over the high of this and expect prices to go higher. Another way to trade that, if you understand options, would be to take maybe do a put spread under this, maybe under 375 or 380. Do a put spread on that to try to make some income from the market going up, even though you're selling it short. Or you can just watch it. You're welcome on this channel to just come along for the ride and watch for a while. And just think about in your head, or maybe you haven't even formulated a trading plan yet. You're just interested in the markets. What would you do? So you could either buy, sell, or hold, right? So if you're already in the market here, you could add over this. If it goes up, you could sell, take a profit at 400. Again, you could do put spreads, options. You could buy a call option, which is a limited risk option, or you could buy a call option. Let's say you bought the 390 call, expecting to go to 400 or 410. It's another way you could profit off of this pattern. So there's different ways to go about it, and I don't always have the right answers, even for myself. So it's something you have to think about. So let's get into, again, this would be a shorter term view, which would be counter to somebody that's more of a just buy and hold the market. And by the way, I'm totally in favor of somebody that's new buying and holding the market over a long period of time. I think you'd be very happy if you do that. If you buy an overall market index fund or an S&P 500 index fund. If you just want to be an investor, that's cool. You're still welcome to follow along and watch as we go along and analyze and look at different stocks and technical analysis on this channel. But as far as a trading view, the other path, I think one reason people get disappointed with buy and hold is when they go and they want to use their money and they just went through 2022, maybe they're ready to retire or they're ready to take some money out for whatever purpose, and their account is down, like 20, 30%, depending on what's in their account. And that's one of my big disagreements about buy and hold, because it can turn into buy and hope. And I don't really like that as a strategy. So I'm going to close that. Okay, so that was the free look at bar chart. If you become a member, I think there's a lot of benefits, mainly that the ads go bye-bye. If we just look at, there's a lot of good information on this site. In fact, when I first looked at this site a couple years ago, I didn't like bar chart. I thought there was too much information here for me. And I went to a more basic service like stockcharts.com. I used that for the first year and a half or so, 2 years. Now this is what you get on the free stuff. You get all these ads, okay, which obviously clutters up the screen. It gives you some information here about new highs, 52-week highs and lows. One of the worst performing stocks last year was Amazon. And I think the best performing stock, if I remember right, was in the energy industry. So that just shows you kind of how diverse the market can be. They're showing these market leaders on here. Big tech took a big hit in 2022, and the FANG stocks were down like 40%, right? Facebook, Apple, Amazon, Netflix, Google were down big time last year. So that is one area I'm looking at in 2023 as kind of a trade or an investment to go back up, minus Tesla. I'm not sure Tesla's going to be ever back up where it was. And Amazon has problems. Amazon spent a lot of money expanding their network. That's very labor intensive and very capital intensive to be buying planes, trucks, building warehouses. That's an expensive business to get into, and they spent a lot of money. So Tesla and Amazon are probably not on my long list for the year, but that would also be subject to what does the chart tell me, okay? So let's just take a look at, I'm going to log in first of all. Let's log in so I can get to my watch list. It's just so you guys can see what bar chart looks like without all of the noise. And oops, wrong password. I think I just forgot my password while I was talking. So, getting older. Anyway, let's take a look at. So again, if you go on bar chart, you can always click on these little. It'll give you a free chart, right? Give you a chart, 1 year chart. You can change it to a 5-day chart or whatever you want to use. Just by clicking on different buttons. Gives you some basic info about Microsoft, their opinion, which I don't pay any attention to. Some basic fundamental information about the company you're looking at. And this area I kind of like too, Microsoft related ETF. So it shows Microsoft's performance over the last 3 months versus other indexes or ETFs. So that's kind of interesting that it's underperformed there. Options information, which is one reason I really like bar chart, is you get some options information here. But there's just a lot of info on these companies. You can go to general overview of the company. Here's a business summary of what they do. Right. But let's just go to the charts now. Enough about bar chart and how to use that. Let's go to our watch list. So if you're going to invest in individual companies, you should have a list of companies you would be interested in owning, right? When you buy a stock, you buy a share in a company and you have an ownership of that company. And you can see here, I've got a list of whatever, I don't know, maybe 30 companies, 35 companies that are on my watch list now. That's probably way too many. I could never even afford to buy all these companies, but as we select what we believe the best investment for us is over any period of time, you have to come up with a way to sort and segregate, first of all, what you can afford, and second of all, what you desire to own. So let's say I desire to own Microsoft. I can put it in a watch list, and then I can watch it, right? I can watch the chart. I can watch when is the next earnings announcement. So you can see on this chart over this period of time since 2018, I think it's pretty clear kind of, how does this chart match up to our market cycle? And it looks to me, just quickly looking at this, like Microsoft is still kind of in that late stage 4 downtrend. So is this time to buy Microsoft? I don't know, probably not for me immediately at this time, but certainly something I'm watching. They're a very profitable company, and I would like to own a piece of Microsoft. So this is on my watch list. We can look here under the per share tabs. Their most recent earnings were back on October 25th. Their next earnings date is this month, going into January 24th. So that is a key bit of information. Is watching what happens on January 24th. As earnings are reported, that is previous information that's now being reported. So that's all the information from October 25th of last year up till now. How did your company perform? Right? So that's past information that had to be collected and analyzed and then reported. As these companies report earnings here in early 2023, that's going to make a big um, that's going to be a big piece of information as to whether or not I would want to invest or trade Microsoft. So when it comes to the investor point of view, if earnings are growing, that's great, even if the stock price goes down a little bit. If, however, Microsoft reports um, negative growth or not growth that has slowed down, or all of a sudden, their services are not being purchased as much, or their profit margin is declining, something like that will cause the stock price to go down. And that's just one of the things you have to watch. As a trader, it can be very dangerous to trade around earnings. That's generally when you'll get a gap open or a gap the next day or a gap over a weekend as they report earnings. So it's very important to watch earnings if you're going to trade individual stocks. The other thing I want to show you guys on that is you can see on bar chart, okay, if we go to a chart, because I have earnings on my charts, and I go to 1 year chart, and I can see quickly what Microsoft has done over the past year when it comes to earnings. Now, obviously, over the past year, prices come down. But if I just kind of hover near this E symbol on the chart, I see back at this time last year, they had $2.48 per share earnings, right? If I hover over that, you can kind of see the little blue letters there next to the pricing up here. Right up here, you'll see the blue number pop up. See where it says 248? That's 248 per share earnings. So they're profitable in January of 2022. So that'll be a key number to compare. So if they come out with earnings here in January 23 of, let's say, $2.75 a share, that's great news. If they come up with earnings that are declining year over year, that's bad news. And if we go forward to October, we see they earned $2.35 per share in October. So you can see from here, 248 to 235, they had declining earnings per share. Still profitable. And here in this time, they had $2.23 per share. And here they had $2.22 per share. So Microsoft had a year of declining earnings, which makes sense in the economy, and it makes sense why their price came down. So when you're looking at valuations, you're looking at price versus earnings, right? So at the end of this day and this week, Microsoft closed at 224.93, and at this earnings point last year, Microsoft had closed at 288.49 with higher earnings. So basically, as an investor, the stock is becoming more and more on sale as earnings come down and the valuation has come down. So if we get a positive earnings report this month, price may start to go back up. If we get more declining earnings, I would expect the price to continue down. So I think you guys can see why I would be hesitant to buy Microsoft at this time before earnings. Now, on a technical basis, if let's zoom in, you can see we had this bottom pivot here on a big green candle. We had another bottom or a lower low here with three big red candles, and then was kind of bought back up immediately. And then we have this area here where we sold off again since the middle of December to this point, where this last day of this week, we put in a green candle with a bottom tail. So what does that tell us? Well, it tells us that there is some buying interest at this area, right? These here at 219 and here around 213 or 214, there was some buying interest. So that's good. And it appears on Friday there was some buying interest again at about between 219 and 224. So this looks like we're starting to maybe form a bottom, but we won't know until we get some more information, because over here, if we look back in time, back in May and into June, it looked like we had formed a bottom, right? Let's see, bottoming tail candle, kind of a double bottom there, a retest here, and then prices accelerate to the upside. Well, unfortunately, because we're in a bear market, prices then in August sold off into the last quarter of the year. So that was a pretty strong sell off, especially for a major company like Microsoft. So there's still definitely some hesitation in the market now to buy the stock because of what happened back here. So again, this is on my watch list, just giving you a view of how I look at it. And certainly Microsoft is a company I would wish to own, but the question is at what price? Okay, so that's one of my top 10 is Microsoft. So now I'm going to start speeding it up a little bit. Okay, so we got Microsoft, we got Apple, right? Apple would be one that's definitely on my watch list. And I like using this feature, this flip chart feature, because I can quickly go through the analysis just using the charts. Okay, again, you must consider when is earnings. So I'm not going to go over each company when their earnings is. I gave you Microsoft. You guys can do some homework on your own. So I'm going to go to a candlestick chart. Okay, I'm going to go out. Again, I like starting out maybe 3 years or maybe the 2-year time frame. So I get that picture of what stage are we in. What is my bias? And then what is my action stage? I like going out and coming back into maybe a 3-month or a 6-month chart to make a decision as to what action I'm going to take. So we're going to have a bias time frame and an action time frame. So this is our bias 2-year time frame. So what on this chart in the next 5 seconds, this is Microsoft. We can see our bias time frame shows declining prices, right? It probably late stage 4 or continued stage 4 is what first comes to mind. That's why I'm hesitant to buy Microsoft here. So we've already covered Microsoft. Let's go to Apple. This is also on my watch list. This is one of my top 10. Apple, while it hasn't, it doesn't look as dramatic as Microsoft. It still looks like it is, in stage 4. I don't see a lot of reasons to buy Apple at this time either, based on my bias. At least if I'm going to buy and expect appreciation. I think there's still some more downside to these names. Again, this is just my view. You could always trade these on a lower time frame. If you're a day trader, you may see an opportunity come up over the next week or this month in some of these names. So our next two that are my top 10, which I already own, I already have positions in these from last year. So for right now, Microsoft and Apple would be just not for me at this time. But these two I'm already in. I have small positions in these because these are two that are very volatile. So XBI is a biotech ETF which owns several different companies in that space or that industry. And we can see here that XBI is late stage um, 4, in my opinion, out of 4 into stage 1. Okay, back to stage 1. So these companies come and go. Now, most of these companies don't make money, but there's such a future looking industry with future technology that can help people medically that I want to be part of that. So that's why I chose ETF instead of individual companies because that gives me some protection against any one company going out of business. So XBI has certain companies in it. In my opinion, we're in stage 1 on this, maybe even early stage 2. So I do have a position XBI. Same with IBB. This is a NASDAQ biotech ETF. There's different holdings or different percentages of holdings in this ETF. And this one is probably more in stage 2 right now, going back up versus XBI, which is still in stage 1 kind of. This one actually did pretty well in um, 2022. So you can see here since around May, it's kind of been this little mini uptrend. It did sell off with the market, back in here. It was actually going down before 2022, back in late 2021. So this one went down sooner than the market, but has also come up sooner than the market. So this is one I'm buying and holding for 2023. Another company I really like that did pretty well is Peri, PERI Network, Peri Network. I believe they're in the communication services sector. That sector got crushed, but this stock did not, showing relative strength over this time frame. And you can see the most recent weekly candle here is an igniting candle after a pullback. So this right now would be a buy for me. I currently have a position in PERI, and I've been in this one since it was around here, somewhere $20, $22 or so. But that is one of my picks to click here, continuing the uptrend in 2023 is Peri. Let's take a look at some other ones. Retail in 2023 is not a buy, in my opinion, and several of these companies have gotten crushed. Jo-Ann Fabrics got crushed. What's the other retail one I was watching here? There's another retail one here on my list. I think it was Bed Bath & Beyond. They got crushed. So retail is a tough area, and that's going to continue to be a tough area with inflation in 2023. If I was trading retail, I would be looking to short or take options positions that would profit from stocks moving lower in retail for 2023. So retail is on the watch list for that reason. Again, marijuana has been a huge disappointment. Whether you're looking at individual companies like Aurora Cannabis or an ETF like MJ, that has been a big disappointment over the last 3 years. So you can just see it's still in downtrend. So stay away from marijuana at this time if you are looking to go long. Now it could turn around, but until it does, it's been trending lower. So those would be two to kind of maybe stay away from. What else did I have? Oh, Netflix. I like Netflix for 2023. Netflix got sold off very hard in 2022 and has since kind of bottomed out and going up. And Netflix, I don't really think is a Wall Street favorite because they're not part of the old media group, like CBS or Viacom or Warner Brothers. They're doing their own thing. They've got their own platform. They've got their own content. You know, they've got a lot of things going for them, and they make money. That's the thing about Netflix versus the other FANG stocks. Netflix is a money maker. They've got earnings, good earnings. 320 a share. Then we had this earnings report, 310 per share. Back here was 353 a share. But look at how high Netflix got. It got up to almost $700 a share, and they were still only earning $3.19 a share. Back here, they earned $2.97 per share. So now this is one that's on sale versus their earnings, and they're making money. And you've had this bottoming area, kind of a breakout, then it went sideways for a while, then it broke out again, and then it went sideways for a while. Now it looks like, I would say over this candle, or a more safer play, you could go over this red candle, over 331, buy or add Netflix. That'd be my, that's the way I'm looking at Netflix as a consideration. And I do have a few shares now in my portfolio when it comes to Netflix. I really like them, and I like their service. To be honest, it's one great way to sort and segregate your list. What do you like as a consumer? What do you like to watch? What do you like to? What industry are you in? Okay, that's another important thing. So, another industry we're going to look at here real quick is the semiconductor industry. These stocks also got crushed in 2022. Companies like AMD, still in a longer term downtrend, um, and late stage 4, in my opinion, on AMD. And they've had some bad earnings reports recently in this industry. So watch out early on, first quarter, I would watch out for these. I would not expect a big bounce, but I do have positions in AMD, Micron, and Texas Instruments. I don't have a position, but it's on my watch list. So these are all companies that are kind of still selling off. Now, Texas Instruments had some relative strength to it, didn't quite have that sell off that that AMD did or that Micron did. This is a newer company, ON Semiconductor. They actually showed a lot of relative strength and resilience through 2022. NVIDIA, a Wall Street favorite. Some of these companies will be favorites. So all these are on sale right now, to some degree or another. The semiconductor industry. So, if you work in that industry or you know about it, you may have a few companies you like to watch. Put them in your watch list. Watch them whenever they start going up again. Yeah, and this is 3 years. We zoom in to NVIDIA, let's say. Let's say I look at NVIDIA and I think, yeah, it's still a downtrend, but it's on sale. So maybe I want to take a position in NVIDIA. Well, even in the lower time frame, it agrees with the higher time frame. I mean, this is a big sell-off right here. Big red bar, big red bar. Finally, on Friday, we got some buying. And, can it get over this area and start moving back up? If it can't this week, on Monday, Tuesday, or Wednesday, I would not be a buyer yet of NVIDIA. I'd wait. So it definitely has that 3-bar turn look to it, but it's in an area of it could go either way. That's the problem with these stocks. They could go up or down. They could even go sideways for another week or two. We don't know. But those are definitely on the watch list, the semiconductor area. If you guys like ETFs, you can look at this, the XSD Semiconductor Index, which would give you something to compare these companies to. You can see here, over 3 months, we had a nice end of the week, right? Friday, we had a kind of a breakout here on this time frame. But if we go out to the 3-year time frame, we are in a sideways area, kind of a stage 1, where again it could go either way. So I would say in this area over maybe 175 could be a buy. Below 164 would be a sell. I would see the semiconductors maybe retesting their lows. So it's just one of them things that's in an in-between area. Okay. So that gives you some ideas to think about there. Another pick to click for 2023 is Dow Chemical. This is on my list. Okay, because in my opinion, it looks like Dow Chemical has already bottomed, come up, went sideways, and now is breaking out. So this one is a buy over 52 or 53, probably over 53. I would consider Dow Chemical a buy. Very stable company, pays earnings and dividends. So companies that are paying dividends are making money. That's where they get that dividend money from. It doesn't come out of the clouds. Tesla, I'll show you a chart. Tesla, I would stay away from Tesla this year because they are being dropped. When stocks fall out of favor, just like certain music, um, music services or music devices fall out of favor, this is what happens when stocks fall out of favor. They start taking the elevator out of the building. So that's my opinion on Tesla. Again, I'm still going to watch it because if it turns around, maybe I'd like to own some Tesla. What else do we got? Square. Okay, this is another one on my list. I do own some shares of Dow. So, I'll disclose to you guys what I own. I don't have a problem doing that. Just understand that, it has to be part of your plan if you want to own it too. So Dow Chemical looks to me like it went up, sideways, down, and is now reversing course and going to go back up for 2023. Square services. Square, PayPal, eBay, and there was another one in that payment space, which looks like they're bottoming out. So Square still makes money. Had a high price of around $290. Guys, this is on sale now. It's $68.99. Okay, this is like you go into the car dealer and that last pickup truck from 2021 is still sitting there, and it's now half price. You know, that's what I'm looking for in 2023. Good value for my money because Square back here I had earnings of 66 cents, then it went down to 37 cents, 27 cents, then 18 cents, then 18 cents, and this most recent earnings of Square, okay, it's not. Sometimes these blue buttons don't work, but if we go to more data on Square, we can see the most recent earnings per share had 42 cents per share earnings. So that's better earnings than they've had in a long time. And when that starts happening, when earnings start growing again, Wall Street is generally willing to pay up. And this one's on sale, Square. So I like Square in this area. I wouldn't take a full position here because it's still in this bottoming pattern, this downtrend, end of a downtrend area, and it can go down lower. But I have a small, or I'm looking to buy Square. I don't own Square yet. I'm looking to buy Square. Probably, over on my action time frame, on this daily time frame, it's back and forth for sure, but it looks like it came up. The problem with this chart is it doesn't have a lot of room to the upside. So if you bought here over this high at, let's say, $70, you put an order for 70, maybe $69.95. Well, your very next pivot's right here at 72.48. So that's not a lot of risk to reward unless it really gets moving, and it gets over this pivot and then goes over this pivot. So that's why I wouldn't take a full position in Square. It has my 3-bar turn. That's part of my criteria. The 1 bar here and then a lower low and then a bar that opens and closes higher over that first bar. It has that criteria. And it even had one here too, this 3-bar turn. But overall, it's been a tough row to hoe here trying to make this big turn. And we can see that on the longer term chart, let's say a 1-year chart. So it's just in this bottoming process. So this is an area of a profitable company in an accumulation area, stage 1 area, in my opinion, this back and forth. Nice part about this chart is there's a nice big void here to the left, longer term, back up to, if you look at this area, 92.58, or maybe 140 to 150. So 2023, I like Square a lot and looking to get into Square. And related to Square was this other payment service. I'll find it here. Anyway, Facebook, I'm not a fan. I think that has some more room to the downside. Pinterest looked promising until recently. We recently had this big red bar. I do not like that big red bar, although over the next couple days, 3 days, it did start to turn around. And we are making higher lows. So here was a low, here's an equal low, higher low, and higher low. Bear just a little bit higher low. But the problem is we're not making significant new highs. You know, it's just kind of grinding higher, grinding higher. So this is one that I like technically, and I kind of like the company in general. I believe they make money. Yeah, they have earnings, they have good revenues and stuff like that, but it's just like this grind higher. Now this is one, if you took a small position, maybe not full position, this is the type of stock that can gap up on you. I don't think it's going to really gap down because this big red bar here was actually a gap up and then sold off. When you get these big red bars like this, depending on how they form, where they form, that was actually at one, that was a gap up. So this stock will gap up. It gapped up here. It gapped up here in the resistance. So you got this resistance around 26, 27, and that limits your return short term. But pins is definitely on my list for the year. I'm just trying to decide, you only have so much capital, so you have to make some decisions where you're going to put it. Zoom, I like for 2023. I think the work at home revolution is here to stay. I mean, just me making this video, this is coming from home. This ain't coming from the corporate office. And many people, I don't think are going to return to work. I think they're going to stay at home full time, or maybe go to work 1 or 2 days a week if they have to. And if the boss doesn't like that, I think they're going to they're going to find a way to work from home. So Zoom is not a buy right now, but it's definitely on the watch list. It's definitely in this bottoming pattern stage 1 area. I like Zoom. So a few more, and we'll finish out the top 10. And Etsy had a really good year, actually. Etsy definitely had some relative strength. I think there's some stickiness to Etsy when it comes to consumers. I like it as a consumer. It gives you some personalization to things that you want, or for gift ideas. I really like Etsy. So the thing is, in my mind, is Etsy seasonal, or is it something that people really use year round? And I think people are using it year round. They are profitable, and I think they do a great job. I think they have a great site and a great community at Etsy. So I like Etsy. My problem with them is Etsy at this price at 120. And if we look out longer term, do a 3-year chart on Etsy, we could see why I would be hesitant to pay up for Etsy right here. Now on a 3-year chart, it looks like it came down. I mean, Etsy was, a $300 stock. Well, it's really come down. It's about half price now. But you still have these selling bars here. Big red bar, topping tail bar, another red bar. And finally we got a bottoming tail bar, but it's below all that. And so I think Etsy is not necessary to buy right now, but under $100, I love Etsy. So that's definitely on my list, because I think just the consumer experience is better than other websites. And eBay, I do own some shares of eBay. eBay had a nice week, although it's still in this downtrend. I think the downtrend in eBay is coming to a close, as it's still one of the biggest websites in the world. Again, maybe not a full position here, but if you want to start nibbling at eBay, I think there's definitely room to move back up. Again, some of that will depend on the economy. Um, I was watching these shipping stocks. I would stay away from shipping stocks right now. Um, Negative GDP, higher interest rates, I think are really going to take their toll on shipping stocks in 2023, including Genco, Zim, big companies like UPS and FedEx. I think you're going to see um, these companies come down in price in 2023. So what else do we got on the list we can talk about? I talked about Dow, Square, Facebook, Meta, Pin, Zoom, Etsy, eBay. And how about here's the NASDAQ ETF, QQQ. So this is why I think there's still a little bit of trouble ahead is because we're still in a downtrend long term on these indexes. It looks like it might be trying to bottom here, but I would not be surprised in 2023 if the overall indexes kind of go sideways. Okay, including IWM is a ETF I watch. This is the Russell 2000 market ETF. You know, that's what I see there. Gold, materials. I believe materials, including gold, probably probably going to have a pretty good 2023 because they did not experience any real growth in 2021. And in fact, it was surprising that gold went down in the market. And but it looks like gold and GDX, which is gold miners, has kind of made this turn going up, and there's room to the upside back up to around 40 bucks, $41 in GDX. So that is on my watch list, and I do own some GDX. Oh, PayPal, that's the one. PayPal is another one similar to Square that is in this bottoming trend. PayPal is very popular with payments, okay, and they make money. So stocks that make money, I think, are going to do well in 23. Stocks that don't, not so much. So PayPal is on my watch list. Intuit, which is a big software company, seems to me to be seasonal around tax time. So I don't really, to me, it's out of my price range at 386.52. Again, Intuit was up around 700 bucks. So right now it's half price. But I could see Intuit going either way. BBH is another biotech ETF, kind of starting this uptrend. Biotechs. And we'll give you a few more here. Band, which I don't know what they did with, it looks like that's bottoming out. 10 Cent Music has recently had a little bit of a breakout. So 10 Cent Music, cheaper stock at 874. Definitely has some void to the upside. So that looks positive. I believe that's a Chinese company. Yeah, ADR. So invest appropriately. I would not put all my eggs in any Chinese company, but this one seems to be doing okay. And they have earnings. So TME is on the list. What else? Amazon is struggling. Hologix is kind of holding its own sideways. These last two look positive to me for the year. Interpublic Group, IPG, and VFC. Looks like it is still in a downtrend, but on the watch list because they have a profitable company. Okay, they have earnings and dividends. So dividend investors, long-term buy and hold investors love companies like this on sale. So this was at $90 today on sale for $29.54. Think about that. That's 60-70% off of a profitable company that pays dividends. So dividend investors love that kind of stuff. Dividend investors are going to make very good return, I think, in 2023. So look for quality, guys. Don't look for crap that's been sold off, is not making money. And I can give you guys some companies to watch out for, mostly in tech. not Microsoft, but companies like maybe something like this. Datadog, I think, is one that was kind of crushed. You know, if we look at a full chart and we look at Datadog, you know, losing money. Actually, they're making money, so maybe this one will come back. But again, this was a $200 stock. It got crushed. Stuff like other software companies out there, like oh man, I just lost. I think Adobe was sold off pretty heavy too. You know, this is the stuff to watch out for. Stuff that was $700 is now $300. Well, it could be cut in half again. You just don't know. That's the problem with some of these big tech firms, as far as you know, they're just overpriced. That's the bottom line. How about something like Riot, which was related to Bitcoin? I would stay away from Bitcoin unless it really shows a strong turn. This is another one that was sold off. Riot, companies like Mara. So you can see stuff like, let's see what Uber's doing. That's an interesting one. That's not on my list. It probably should be Uber. I think they're still a great service, but again, they've sold off too. So that's it for today. I'll tell you one that's really sold off that was another Wall Street favorite was Twilio. I think they're in the software space too. Software companies right now, guys, that don't make money are going to get crushed and probably put out of business. Okay. They don't have valid business. Even up here, they're only making 4 cents a share, 5 cents a share, losing 11 cents a share, then losing money. And here we've got most last two earnings reports still losing 11 cents per share, and here still losing money, I believe. Here, let's check the most recent earnings on that. But that's basically what's happened at companies like Twitter. You know, they weren't making money, so somebody came in, bought the company, and they're cleaning house. They are cleaning house in these big tech, big software companies that just don't make money. Because at some time, earnings don't matter until they do. And that's the period we're in right now, a flight to quality. So that will end this video, guys. Anything you want to talk about, you can watch, comment, like, or subscribe. And I wish you guys the best in 2023. Stick around for next month's video in February. And you're also welcome to comment or suggest me what you would like to see or any companies you want me to watch. I'll be glad to help you guys watch them. That's it here for Phil at the Laptop Trader.